The hearing should commence here with the banging of the gavel. Commenced. This hearing of the Committee on the Judiciary, Subcommittee on Commercial Administrative Law will now come to order. Without objection, the Chair will be authorized to declare a recess of the hearing, and there will be votes at 11:30, so we'll have to go and be interrupted at some point. I will recognize myself for a short statement. In February, this subcommittee held a hearing on the state tax nexus, or simply when a state may appropriately impose a tax on an individual or business entity. Today's hearing will focus on that next step. Assuming that sufficient nexus is established, how should a state determine the imposed tax? States currently follow formulas to apportion the tax based on several different factors. They include the location of the taxpayer's property, the taxpayer's income, and even the taxpayer's payroll within that state. That calculation is simple when the taxpayer only conducts business within the state, of course, but becomes more complicated when the business's goods and services are collected income or across state lines. States must determine what portion of the total value of a multi-state taxpayer's property and income each single state should, can, and tax, what they can get away with and what they should get away with. These calculations could lead to double taxation or possibly, in a very unusual case, of somebody who loses their job, under taxation. Considering that many states are actively competing for business development investment, especially during the current economic climate, cold, states may create apportionment formulas which favor in-state businesses over multi-state businesses or vice versa. Such apportionment formulas may also bring in much-needed revenue. But do the apportionment formulas burden interstate commerce? One of the issues we'll deal with. Some contend states need to adopt a uniform apportionment standard. However, some of the states may not want to be limited by such standard. Others claim that businesses have already planned or based investments on the differing state tax structures, and they don't want to interrupt that process. It is the role of Congress and this subcommittee in particular to review whether state taxation affecting interstate commerce is burdensome. Specifically, we should determine whether the differing apportionment formulas utilized in this expanding borderless economy are fair and appropriate. We should question whether the differing formulas favor in-state taxpayers over multi-state taxpayers. We should consider whether uniform apportionment standard is better than alternative and would create a competitively neutral playing field for in-state and multi-state businesses. And we should discuss whether such a standard would lead to a more efficient and robust, we haven't heard robust since the healthcare debate, economy. I thank the witnesses for appearing today, and I look forward to their testimony. And I'll now recognize my colleague, Mr. Franks, who's not here. Having done that, I will go right along. Mr. Coble, would you like to give an opening statement?
I'm lucky to be here, Chair.
We're lucky to have you. We're all lucky to be here, in more ways than one. With Mr. Coble's sage of advice, comments, and observations, we will then go on to the witnesses. And the first witness today, and I want to thank everybody for participating. Your written statements to be placed in the record. They ask you to limit your oral remarks to 5 minutes. We've got a lighting system. Green means you're within the first 4. Yellow means you're in your last 1. Red means you should conclude or be finished. Members will be able to ask you questions. The same 5-minute system prevails. First witness is Mr. John Swain. I almost made you Lynn Swan's brother. Mr. John Swain, professor of college at the University of Arizona, a rival school for Mr. Swan, the Rogers College of Law. Professor Swain has authored and co-authored numerous books, including The Streamlined Sales and Use Tax, and is a regular columnist for State Tax Notes magazine. He's a frequent speaker at state and local tax conferences, consults with state governments and other entities on tax law. Before entering academia, he was with the firm in Phoenix, where he practiced in the area of state and local taxation. Thank you, Professor Swain, and if you'd begin your testimony, and your 5-minute light is now.
Thank you, Mr. Okay. Thank you, Mr. Chairman and members of the committee, and I want to thank you for inviting me to testify today. As the chairman noted, there's a problem in state taxation, and that problem is how do we divide the income of a taxpayer who does business in more than one state. And for example, let's imagine a business that has customers all over the United States, does manufacturing in Michigan, has distribution facilities in Tennessee, maybe does R&D in California. How do we determine how much income is earned in each of those jurisdictions? It's a thorny problem. The states have a clever and generally good solution to that problem. It's called formula apportionment. And what the states do is they compute an apportionment ratio for that business, and that's computed by taking by the average of 3 ratios. The first is the sales factor, and we take the sales in-state over the sales everywhere. That's one ratio. Then we take the payroll in-state over payroll everywhere. Then we take the property in-state over the property everywhere. We get those ratios, we average them, and then we come up with an apportionment formula. We apply that to the total income of that business to determine what income is taxed in that state. I think it's, whenever you're dividing a pie, I believe it's good to have uniform rules. Otherwise, you run into problems of over-allocating or under-allocating that pie. For example, let's assume that Iowa has a apportionment formula that relies only on sales, which in fact is true. And then let's say Illinois has a formula that it employs the traditional three-factor formula I just mentioned. And then assume there's a business with all its property and payroll in Illinois that's making sales into Iowa. All its sales are into Iowa. What's going to happen? Setting aside nexus questions. What's going to happen is Iowa will tax all the income of that business because Iowa only relies on sales and all the sales are in Iowa. But then when Illinois goes to compute that taxpayer's income, sure, there are no sales in that state, so the sales factor is zero, but all the property and all the payroll are in Illinois, and that matters to Illinois. So Illinois is going to tax 2/3 of that business's income, and that business will pay tax on 1 2/3 of its income. So that's the problem when we have inconsistent rules. Now, the opposite can happen. Assume the same facts, but the business is located in Iowa and making all of its sales are into Illinois. Iowa won't tax that business at all, even though it has payroll and property in Iowa, because Iowa doesn't care. It only relies on a sales factor. Illinois will have the sales factor will be 1 because all the sales are in Illinois, but there's no property or payroll in Illinois. So that ratio will be 1/3. And in that case, that business will only be taxed on 1/3 of its income. So we can have undertaxation as well. In the 1960s and 70s, there was relative peace in the valley. There was relative uniformity among the states, and they used the three-factor formula I described. More recently, the lid has been blown off of uniformity, largely because of economic development pressures. States and taxpayers realize that every time a business adds property, makes a capital investment, adds payroll in a state, their tax bill goes up. And so in the name of economic development, states have begun to overweight their sales factor, which in effect lowers the weight of the property and sales factors, property and payroll factors, to attract business, to have a more favorable business environment. But in this period where some states are changing and some aren't, we have a lack of uniformity and the risk of overtaxation and actually undertaxation. In my view, there's a predicate for intervention has been met because of the compliance burdens of non-uniform rules, because of the risk of double taxation. It's a burden on interstate commerce. On the other hand, as I mentioned in my example earlier, there's the opportunity for tax planning and undertaxation, which I suppose is less of a concern to Congress, unless the states come to Congress, hat in hand, and say, please save us from ourselves. I don't know that they're going to do that, but that would be the other possibility. Thank you very much.
Thank you for your testimony, and we now recognize Mr. Jim Eads. Mr. Eads has been with us before, Executive Director of the Federation of Tax Administrators since September, and where he capping a 30-year career in state tax work. He leads the FTA staff in D.C., and he represents the 50 states, the D District, and the New York City. Previously, he was Director of Public Affairs for Ryan, a major tax consulting company, where he represented their clients regarding state tax policy and legislative proposals. Past President, National Tax Association, former Chairman, Electronic Commerce Task Force on the Council on State Taxation. Thank you, Mr. Eads. The light begins.
Thank you, Mr. Chairman, members of the committee. Thank you for the opportunity to appear before you today. As the chairman said, my name is Jim Eads. I'm the Executive Director of the Federation of Tax Administrators. The Federation is an organization of the state tax agencies of all 50 states, as well as the District of Columbia and New York City. As you know, Navjeet Bal, the Commissioner of Revenue for the Commonwealth of Massachusetts, was scheduled to present this testimony at the hearing in March, which was rescheduled today. She could not be here today, and I'm honored to be here representing her and the Federation of Tax Administrators. We gather at a difficult time for state governments. The recession has taken its toll on our citizens, increased the demand for state services, and caused record declines in state tax revenues. States have responded by cutting services, laying off state workers, drawing down rainy day funds, and in some cases, raising taxes. The federal government has been a vital partner to the states, providing financial assistance, which has allowed the states to meet their balanced budget requirements without even deeper budget cuts. As the states prepare their budgets for the upcoming fiscal year, it appears that state revenues are no longer in free fall, but state budgets still face enormous challenges as federal assistance ends, demand for state services remains strong, and state revenues are well below pre-recession levels. You asked that we discuss the general issue of apportionment of corporate income for state tax purposes, and specifically to address the question of what role the Congress has or should have in developing apportionment standards. This hearing follows on a hearing in February that the chairman mentioned on nexus issues. You heard then from Utah Tax Commission Chairman Bruce Johnson, and I repeat now, a respectful request that Congress continue to refrain from federal legislation in areas of state taxation, including apportionment, that are best left to the states. An honest and healthy respect for our federal system requires no less. For the better part of 50 years now, the states have found a workable solution to the issue of determining a corporation's taxable income through the application of formulary apportionment. It has served as a stable and widely accepted means to approximate the extent of a business's activity within a state and has proven sufficiently flexible to address a changing economy. As that economy has evolved towards a service and information economy, states have responded by adjusting their apportionment formulae and also by adopting alternative apportionment regulations for particular industries, such as financial institutions, telecommunications, airlines, railroads, trucking companies, television and radio broadcasting. Despite businesses' opposition, the Multi-State Tax Commission is undertaking an effort to modernize and standardize the sales factor for services and intangibles to better reflect today's economy and to promote uniformity amongst the states with respect to this important sector of the economy. We believe that the states are the best laboratories for the evolution of apportionment structures that significantly affect their own fiscal destiny. State tax administrative agencies are confronted daily with issues related to state corporate taxation. They have the knowledge, the experience, and expertise to craft what we believe are workable solutions. Given the diversity and complexity of the American economy and the rapid changes that it is undergoing, it is imperative for both the business community and the states to maintain their flexibility to adjust the apportionment formula to address particular industries and to respond to particular needs of that state. Any type of federal intervention in this effort would have a deleterious effect on the flexibility that is in the current apportionment structure, and would in all likelihood have unintended consequences. Given their expertise, their motivation, and their on-the-ground relations with the business community, the states are best positioned to revise formulary apportionment as it applies to state taxation of interstate commerce. Thank you for your time and for your consideration of this important issue, and I'll be glad to respond to questions at the appropriate time.
Thank you, sir. We're approaching a record, 2 witnesses who have not gone to the red light. You're on the spot, Mr. DeYoung. Mr. DeYoung is a tax counsel at Tax Executives Institute, Inc., focuses primarily on state and local tax issues, drafted several Supreme Court amicus briefs and written advocacy pieces on issues ranging from economic nexus to state add-back statutes and penalties. Prior to joining TEI, he worked in the McLean, Virginia office of Ernst & Young. Majority of his time spent on state and local tax practice, assisting clients with a broad variety of issues. Thank you, Mr. DeYoung. Don't feel any great, burden, but it's all on you.
Thanks for taking away that burden. Is this working for you?
And your time started.
Okay.
Good morning, and thank you for your invitation to Tax Executives Institute to participate in this hearing and to provide the business perspective on issues related to the apportionment of income for state corporate tax purposes. Founded in 1944, TEI is the preeminent worldwide association of in-house tax professionals, with more than 7,000 members representing over 3,000 of the world's largest businesses located in the United States, Canada, Europe, and Asia. My testimony today will focus on two areas. First, I will discuss the practical effect of the current patchwork of state apportionment rules and how they affect multi-state businesses. Second, I will describe the challenges that exist to achieving consensus in this area. But before jumping into apportionment, I think it's also important to note that complexity exists in determining the tax base, the pie that Professor Swain described, that must ultimately be divided among the states. This includes determining which entities must be included in a tax return, which can be complicated in part because of the general lack of uniformity among the states. After identifying the entities to be included in each state tax return and the tax base of those entities, businesses must apportion that income to the various states in which they have nexus. For the reasons outlined by Professor Swain, many states have moved away from a standard formula based on a corporation's property, payroll, and sales, and have used their apportionment formulas to benefit and encourage in-state investment. For example, by moving the payroll and property factors out of the apportionment calculation, the state can benefit in-state businesses by eliminating the ratios tied to the production of a taxpayer's goods and services. The resulting lack of uniformity increases the compliance burden on multi-state businesses. Perhaps the most striking example of this disconnect is the manner in which receipts from the sale of services and intangibles are sourced for purposes of the sales factor. Under many state statutes, taxpayers must source those receipts to the state in which the income-producing activity is performed. Many other states, however, have begun to source sales to the location where the customer receives the benefit of those services. The inconsistent application of these rules can result in both double taxation and taxation of less than 100% of a taxpayer's income. TEI's written statement includes an example of a taxpayer that provided computer help desk services and ultimately paid tax twice on half of its income as a result of the varying sourcing rules applicable to multi-state service providers. The example also shows that these inconsistent rules can work in favor of the taxpayer. By moving its headquarters from one state to another, the taxpayer in that example would pay state income taxes on only half of its income. While the example may seem only an interesting hypothetical, situations of a similar nature are not uncommon for businesses across the country. This brings us to the question, is it possible to achieve consensus on a uniform apportionment standard? Based on experience across the country, the challenge will be significant. Some degree of complexity is inherent in any multi-jurisdictional tax system. Changes in one area would likely benefit some businesses and disadvantage others. This occurs because the facts and circumstances of each business can vary by industry, geographic location, and other factors. Over the years, there have been repeated efforts to promote state and local tax consistency and uniformity. These efforts have, for the most part, met with limited success for a variety of reasons. State economic and budgetary pressures, concerns about state sovereignty, geographic and demographic considerations, and interstate or international competitive concerns. A one-size-fits-all approach to apportionment may not be uniformly supported by the business community. For example, a uniform apportionment formula that includes a payroll or property factor would increase the state tax burden on businesses that located production facilities in states that offered single sales factor apportionment formulas in order to attract in-state investment. That may also run contrary to policy decisions made by states to promote in-state investments. In conclusion, Tax Executives Institute thanks the subcommittee for the opportunity to share our perspective on the complexities of our multi-state tax system in general and apportionment matters in particular. And with 25 seconds to spare, I welcome the opportunity to answer any questions.
Thank you, Mr. DeYoung. What a great panel. I think that we should give them applause. That was very special. I'm going to yield to Mr. Watt for the first question. And normally, Mr. Watt, if you're recognized for 3 minutes.
3 minutes?
Well, I think we have votes at 11:30.
Oh.
I'd like to give everybody a shot.
Okay, that's fine. I'll try to stay within my time. My green light is not on, though. So You better start the clock. Mr. Eads? Eads, you are with this multi-state task force that's doing some work in this area. To what extent will they address the coming up with some uniformity on the definition of nexus?
I alluded in my testimony to the Multi-State Tax Commission, which is working on an issue with regard to apportionment. I represent the Federation of Tax Administrators, which includes all of the state's tax agencies. Right now, the issue of nexus is governed by 2 United States Supreme Court decisions based on the Constitution.
I understand that. I'm trying to figure out whether anybody in this task force or any of the multi-state discussions are trying to come up with some kind of uniformity in that area.
There is an effort, yes, among the states to, particularly at the Multi-State Tax Commission, to address the issue of nexus as well as issues with regard to apportionment. As you might well imagine, being a participant in the legislative process, getting everyone in a particular group to agree about something sometimes can be problematic. And as the other witnesses...
Are they anywhere in the neighborhood of having some kind of consensus about what the definition of nexus is?
Well, it depends on which which tax we're talking about, Mr. Watt. In the area of sales taxes, there is going to be some legislation, and has been legislation introduced in the Congress in the past, which would establish a universal definition of nexus for sales taxes. There is also pending before this committee a bill which would also define nexus in the corporate income tax.
I think you may be missing. You're lobbying for the states to work this out, and then you're telling me about legislation that's been introduced here. So what I'm trying to get a sense is whether there's any possibility of whether the states, if we stay out of this, can resolve this without legislation here.
The states can make some progress, but when, as we have in the sales tax area, the Supreme Court has ruled based on the Constitution, there may not be a whole lot that the states can do. The states can act collaboratively, and they probably can even act collaboratively within the Constitution, but it's very difficult to get there.
Mr. Chairman, I'll yield back before my red light comes on too.
Thank you, sir. I appreciate it. Mr. Coble has left the building, like Elvis. Mr. Scott, you're recognized.
Thank you. Professor Swain, you mentioned a situation where people in Iowa could, if you run a business out of Iowa, which just has a sales, is that what you, okay. Mm-hmm. If they were in Illinois, selling in Illinois, taxed at 100% and move their corporate headquarters across the street, as Mr. DeYoung has indicated, would they cut their corporate taxes?
Yes, I think, my scenario was
if you move a company that's doing business in Iowa, selling in Iowa, property in Iowa, if you just pick up your corporate headquarters, in Illinois, and pick up just the corporate headquarters and move it to Iowa, where all your customers are still in Illinois, you could be taxed on 1/3.
Yes, you could reduce your tax liability substantially.
You got places like Bristol, Tennessee, Bristol, Virginia, Kansas City, Illinois, Kansas City, Missouri. Do people do this to locate across state lines to try to save some money? Does that actually happen?
Oh, certainly. Certainly. And you have to move your operations, not just your headquarters, because they count your property and your payroll. But if you move your operations, you can you find a tax haven if you can.
Now, we're talking about corporate income tax.
Mm-hmm.
How many people use all three, sales, payroll, and property? How many just use sales? How much variation is there?
It's a moving target. It's in my written testimony. I'm thinking maybe 11 to 14 or somewhere 15-ish use the traditional formula. I think it's up to about 14 or so that use sales only, and the rest are using a super-weighted sales factor. Somewhere in there. It's in my testimony.
Now, if you pay your corporate tax in one state, do you necessarily get a credit in the other state?
No, the interesting thing about the state system is it's not a credit system. It's just each state determines the slice of the pie it's going to tax. End of story. No credits for taxes paid in other jurisdictions.
And how tenuous a nexus do we have to trigger all of this apportionment?
Well, that's an open question for income tax, but the trend with state courts is that you just need what we call an economic nexus. You don't need a physical presence in order to trigger income tax liability. That hasn't been determined by the Supreme Court, but the clear trend with state courts is to allow what we call economic nexus for income taxes.
Ms. Chu from California, an expert on this as many other topics.
Thank you, Mr. Chair. Mr. Eads, Professor Swain argues that without uniform apportionment rules, there's the risk of both overtaxation and undertaxation of multi-state businesses. How do you respond to that?
There is a risk. Professor Swain is correct that there is a risk. It is not a perfect system. It is a system that, on a case-by-case basis, has been to the U.S. Supreme Court and been found to be constitutional. There is a good body of case law from the Supreme Court about what the states have done and what's constitutional and what is not. The struggle that the Congress would have would be, if it wanted to craft a piece of legislation, to find something that would please everyone. And as Mr. DeYoung said in his testimony, even among the business community, that would be hard to do. So is it a perfect system? No. Is it a working system that achieves, I hesitate to use this term, but rough justice? Yes.
And how about the issue of double taxation in services? Of course, we know that tangible goods, it's very clear where that tangible good comes from, but with services, there is the risk of being double taxed because it has to do with where the service is rendered versus where it's being received.
Representative Chu, certainly the evolving nature of the economy has put some stresses and strains on the tax system. Many state tax laws were drafted in an era when we were a mercantile system. People went to stores and bought things. There wasn't nearly as much service in the economy when many tax laws were adopted. And so there are some stresses and strains that need to be worked out to try to address that segment of the economy, to make the tax system work and to be fair to taxpayers.
Okay, thank you. I yield back.
Let me ask a question or two about maybe, first, Mr. Eads, you said that you think that we should respect the sovereignty of the states and refrain from federal legislation in the area of apportionment for state tax purposes. You don't see any benefit at all from any kind of uniformity?
Mr. Chairman, I do. I think the devil is in the details. That's, as Mr. DeYoung alluded to in his testimony, even amongst the business community, it would be hard to find a consensus about what the standard should be. That would also be true among my members. So is there a role for Congress to try to alleviate some burden? Yes. As I indicated in my testimony, however, what the Congress would have to do is try to avoid those unintended consequences that would just create a new set of problems or a new burden that business would have to confront. The fact of the matter is...
And do you not think Congress can do that in its infinite wisdom and its ability to craft, meaningful and reasonable and rational legislation devoid of political, considerations and special influences?
I am 100% confident in the Congress's ability to do that, Mr. Chairman.
This Congress, too? Thank you for your endorsement. Either you gentlemen feel that Congress should do anything in this area, or you laissez-faire as well?
Well, I live in, go ahead. I mean, I have kind of the ivory tower perspective. I mean, conceptually, it's a good idea. It's what should be done. I understand that the politics and is difficult, and I don't have much of an opinion on that. But first do no harm. And I think that's what states are worried about, that if Congress tried to do something, it might do some harm rather than some good, even though conceptually or in the abstract, uniformity makes complete sense.
And Mr. Dion?
From my perspective, our members would probably answer a question of should there be a uniform apportionment standard with a yes, and then you asked each one of them what that uniform standard would be, they'd probably give you 100 different answers to what it would be. So I think it would be difficult to build up a consensus behind a single solution to that problem. It is very complex.
I want to thank the members of the committee for attending, and I want to thank the witnesses very much for your testimony and time. I wish we had more time, but we have to vote among other. We have the healthy bill that will help provide for cash for caulkers is what it is. It's called Home Start. Very important bill. And then we have to vote for motherhood, literally voting for Mother's Day. So we all want to get up there and do that to precede apple pie. So we thank the witnesses today. Without objection, members have 5 legislative days to submit any additional written questions, which are 4 to the witnesses. Ask you to respond as promptly as you did your testimony. Without objection, the record will remain open for 5 legislative days for the submission of any other additional materials. Thank everyone for their time and patience. The hearing is adjourned.